How does P2P lending differ from the traditional forms of investing?
P2P lending is also a kind of investment asset class where we say you earn money by lending money to people. In a one calendar year, India saw a roughly 25-30,000 crore loan through PPI instrument.
Bhavin Patel is the founder and CEO of LenDenClub, India's top peer-to-peer lending platform. Since 2015, he has revolutionized financial inclusion and alternate investments. Today, he shares how P2P lending is transforming investing and reshaping India's credit landscape.
Around 55-60% people earn more than 20% return. But at the same time, there are around 18% people who lose their principal as well.
What do you think is fueling this growth?
If you want to buy a car, you are going to take a loan. If you want to buy a house, you are going to take a loan. For every other thing, you are going to take a loan.
Bhavin, hi, let's break it down to the basics. For the uninitiated, how does P2P lending differ or vary from the traditional forms of investing like mutual funds or in equities?
See, in case of mutual fund or equity is quite similar to what P2P is. In case of equity, you invest money in companies wherein you are given certain small token of company's ownership. Here you are given token of loan. So it is the same model where there is an exchange. We are an exchange of loans compared to exchange like NSE or BSE, which offers you equity. Mutual fund is little bit different. In case of mutual fund, you have got somebody who is advising you, who is assessing on behalf of you. Whereas in case of equity exchange, you directly take your decision and execute the order. Here also, you execute your own order. So lender comes on the platform, he looks at the various loans available at that point in time on the platform and takes a decision where to lend money, which borrowers to be given money. That's a primary difference between both.
What do you think is fueling this growth?
There is a huge demand of loans, specifically smaller ticket size loan. And to understand the demand of this loan or supply from P2P platform, we need to understand why regulator came up with this entity. So if you look back 2015-16, RBI, which is a regulator of NBFC P2P under which we operate, they wanted a new type of entity beyond NBFC and banks, which can look at a small ticket size loan wherein the people had to go to private money lender and take those loans. So we as an institution started focusing on small ticket size loan. And these are the people who are looking at, let's say, 10-20,000 rupees loan for a couple of months, who are salaried, getting their monthly income in place. Then there is another set of people who are running their small businesses or they are shopkeepers. But at times they are stretched in terms of money. They have bought some goods. They have to pay money for that, but they are going to sell it in next couple of months time period and earn money. So all these customers come to us on an average take 65,000, 70,000 rupees loan from us. And if you look at the macroeconomic perspective or a picture of India, this is a segment where we call them as a missing middle. And this is the highest number of people in the Indian economy. So out of 150 crore population, I would say around 80 to 90 crore people falls into this. Remaining people are either rich or they are so poor who are not looking for loan. So we are trying to address a need of these people and hence you see the demand. There is another factor which has worked in last few years. Post-COVID, the digital adoption of loan has gone like anything. So the growth has skyrocketed. Today, we have more than 2 crore users on our platform. If you look at in India, you will find very few financial institutions with such a large number of actual users on their platform, out of which around 3 million, 30 lakhs are the lenders, and remaining 1.7 crores are borrowers. So we saw a huge demand coming in. We tried to build our products around those demand, what regulator wanted, what customer wanted, and then COVID fueled that need.
So typically, what kind of returns can investors realistically expect from P2P lending, and how is that differing in terms of numbers from other asset classes?
So P2P lending is also a kind of investment asset class where we say you earn money by lending money to people, right? So there are multiple options, there are multiple approaches people go for. starting from people losing out on some part of the principal, we have n number of lenders who earn more than 20%. So we recently published one of the data sets on our website wherein we shared people who are manually choosing loans to invest into. What is the kind of return they are generating? So there are around 55-60% people earn more than 20% return. But at the same time, there are around 18% people who lose their principal as well. So it is all about what is the ticket size you are bringing in, how much diversification you are looking at, right? So as we always say in stock market also, that don't put your all eggs in one basket. Here also applies the same principle, that if you are putting in, let's say, 1 lakh rupees, put it across at least 50, 100, 200 borrowers. So that some people will default. It's a lending. Some people will definitely default, but that will not have any impact on your overall portfolio, and you will still be able to make good money out of it.
What is the average ticket size?
Lending amount?
Yeah, lending.
It's somewhere closer to 1 lakh rupees.
Okay. So, of course, there are attractive returns that P2P lending offers, but there are, of course, downsides and there are risks involved. What are those risks?
So one is, if you get loans which are defaulting and that is beyond certain percentage of your portfolio, you may end up losing principal as well. So as I said that we published that study of last 12 months numbers, 18% people had lost out their principal as well. But there are 55-60% people who had more than 20% return as well. So one, if you do not do right diversification, that may have a negative impact on your overall returns. That's one of the risks. Second is, if you do not limit yourself in one loan exposure. So a lot of time what happens is, when you see interest rate of 25%, 30%, you tend to put more money in one borrower. So let's say if you are lending 25,000 and you put 5,000 just in one borrower because you saw a higher rate. What if that person defaults? So choosing borrower in a right way is also very important. Then comes the third factor, that what is the kind of historical default the platform has. So default risk is the third risk. So platform has to necessarily publish all that data on their website, and that is a mandatory requirement by the regulation.
Okay.
So one has to study the trend line of the platform's performance in terms of default risk. So these are the three major risks which are involved, and an individual should be mindful about it. They need to study it before making a decision of exposure in P2P lending.
So for someone going for this form of P2P lending, is there any sort of a checklist that they must have before going into it to avoid defaults, etc., and some of the other risks that you mentioned? What should be their checklist?
So they can look at 3-4 different things. One is look at the platform, its size, its historical default numbers, etc. So you will understand what has been performance of this platform. Second is the compliance of the platform. So RBI regulations are very straightforward. There are 10 things to follow. Whether this platform is following those 10 things or not, that's the second thing. Third thing, you should be mindful about the ticket size you are bringing on the platform. So start with at least some reasonable amount, 25, 50,000 or 1 lakh rupees, so that you can have at least some basic diversification among number of borrowers. So these are the 3-4 checklist which you can follow before making a decision of lending money. And when you start lending money, one need to ensure that if 1 lakh rupee is being invested, that 1 lakh should be divided among at least 50 or 100 borrowers. So that when they are repaying back, few of the people will definitely default, but you will still make good amount of money out of this.
So what are the ways that investors can use P2P lending as a platform? There's lump sum and there's picking a loan that's best suited. Can you break it down for us?
Okay, so both ways are very common, and a lot of customers go for both the routes as well. So in picking a loan, you go through the each and every loan, choose it like any other stock market platform, that okay, I want to buy a stock of L&T Finance, 5 numbers. Similarly, they pick and choose the loan. In lump sum product, you lend money in a bulk. So let's say you brought 1 lakh rupees and you said, okay, I want to give money to this kind of borrower characteristic. For example, somebody who is earning between 20 to 30,000 rupees, somebody whose age is let's say 30 to 40 years of age, etc., etc. And then system will bring a list in front of you, and then you can pick and choose borrowers, and At the same time, whole 1 lakh rupees will go to these borrowers. In case of manual lending, which I explained earlier, you have to pick and choose every borrower. So let's say if you want to deploy 1 lakh rupees with 250 each, it will take at least few hours of time for yours. So it's a technological benefit we bring forward to the customer via lump sum route.
Who is this as a product not suitable for, according to you, P2P lending?
I would say somebody who cannot manage their cash flows very actively.
Okay.
Because in case of P2P, after last year's regulatory change, whatever money comes back from the borrowers, that goes directly back to lender's bank account. Now, if somebody cannot manage that money well, those money will remain idle in the bank account for some period of time. If somebody uses it well, they may earn couple of percentage more during the whole year. So one needs to understand that. Second, somebody who doesn't understand the velocity of the investment. So here you do not have any wealth manager who is going to advise. We are just an exchange. So you have to take exposure via exchange. So it is important that you understand the complexity of the product or technicality of the product before you lend money. Though it's a very simple and straightforward product, but it is very important to understand the gist of the product before you take the decision.
And, temperament and behavioral aspects play a big role when it comes to investing and using platforms such as this. And I would imagine that psychological aspects like maybe overconfidence sometimes or big impulses as well would lead to, a potential financial trouble maybe for investors. What tips would you advise to avoid falling into these traps?
So here, see, you are not taking any exposure via capital market, nor these loans are listed on the capital market. So you do not see sudden ups and down in the portfolio, or even if you, let's say, take impulsive decision of lending into 100 borrowers at the same time, it is not going to affect much.
Okay.
The NPA numbers does not move like how capital market moves.
Okay.
Right? So it moves very slowly, gradually. So for example, at the peak of COVID, our NPA number went to 5.91%. In next 3 years time period, it went down to 2.6%. In last 1.5 year, it is now hovering somewhere around 3.5 to 3.7%.
Okay.
Because it is not market linked and a different kind of asset class, the movement in the returns are not very high. However, if you do not understand the asset class, then you may take wrong decision. For example, you may lend all the money to certain specifications of borrower, and that particular cohort may not perform good. So that kind of wrong decision may lead to certain kind of capital losses or less return in the portfolio. So the best advice which we give to our customer is, whatever money you want to bring on the platform, divide in the highest possible numbers, and at least keep investing that money for next few months so that you create a sizable portfolio of few hundred loans. Then observe, see, if you get good results, then lend more money, but at least create a portfolio of couple of hundred borrowers.
There is this perception of P2P lending that it is risky, that it could fuel a potential debt crisis. So what do you think platforms can do to ensure that the credit models actually promote financial stability? Or are there any myths that you want to dispel about P2P lending?
There is always myth going around all the financial instrument. Now, let me just quote some previous experience which I have. So I used to work with one big NBFC around 10-12 years back before I started LenDenClub. And I was responsible to raise capital for that NBFC from market. And my forte was raising capital through securitization, securitized papers. For every securitization transaction, you have to go through the rating of the papers, which we call as a pass-through certificate. Now, when I used to go through that rating exercise, rating agency would always quote one thing, that MSME loans are considered to be vulnerable and the default rate may go up. Now, I always used to ask them that give me a data which proves it's vulnerable. I have seen 2008-9 crisis time. MSME had been one of the best asset class 1 year down the line, whereas there was a stress in retail, there was a stress in big corporates. So a lot of time these myths are sold in such a way that people start believing that these are reality. Now some days back there was somebody wrote a piece of paper and it was adapted across all the news agencies. I had to write a specific thing on LinkedIn, and I said this is a wrong way of interpreting the information. In lending, it is a plain vanilla simple equation that you are lending at, let's say, 20 percentage rate. You lend 100 rupees. You are expecting 20 to come back. If there is a 5% default, 5 will not pay. So you will ultimately make around 115 rupees, out of which you pay platform fees. Whatever remains is your money. That this equation is so simple. But here the myth is default rate may go up. Now in India, retail segment has been so safe. Why all the banks are now moving towards retail? In last 5-6 years, you might have witnessed huge shift by all the PSU banks as well. The banks like HDFC Bank has such a consistent performance, and one of the reason has been the retail loan portfolio. So in retail loan portfolio, people don't default just like that. Even during a crisis time, you can frankly tell me that you as an individual, even if you delay a loan because of some financial issue, would you like to default? No, because for every other thing, you are going to take a loan. If you want to buy two-wheeler, a good bike of 5 lakh rupees, you are going to take a loan.
Yeah.
If you want to buy a car, you are going to take a loan. If you want to buy a house, you are going to take a loan. So these myths always will remain there, but the consumer has to understand that the retail loan has been the most stable asset class in the country for the bank for so many years, and it will not increase default at its own. And there are fundamental reasons behind it. So if somebody sells such kind of data points in the market, they can do some basic research. Nowadays, AI has been helpful. You can go to ChatGPT or Google Gemini and do your basic research and find very useful data. So rather than falling into such myths, they should look at the data. As a platform, we publish last 8-quarter data on our website as well.
Okay.
That what has been trend line.
And what is that data revealing?
It is about NPA movement.
Okay.
That what has been NPA data at the end of every quarter. The same data we submit to the regulator as well.
Okay. You know, often India is compared to the US when it comes to the subprime mortgage crisis that we saw in 2008. Do you see any parallels in terms of this easy credit, the consumer debt, speculative investments, and how does one differentiate between healthy growth and a potential bubble that's about to burst?
So it is essential. Few of the points which you mentioned, suppose a couple of years back, we saw two trends. One, that lot of borrowers are having a lot of money exchange movement in their bank account with this lottery or a game kind of websites or a game kind of apps. So we started considering that as one of the risk area. And later on, RBI was also a little aggressive on those kind of usage of the loan. Second trend which we had seen was speculative investment, wherein people used to invest into certain instruments like futures and option by taking loans. However, I think P2P will remain safeguarded out of all these issues because our ticket size are very low. Somebody would not want to take 5,000 rupees, 10,000 rupees loan and do those experiments. But yes, for larger institution where the money lending amount is much larger in few lakhs, then they might have such kind of issues. And I think regulator has been guiding all the lending institution to be little bit cautious around it. As far as the comparison with US market is concerned, I think US market and their classification of subprime is little different. In India, I would say the people with score more than 750 has a little bit higher probability of default compared to somebody with less than 500. That is the kind of data pattern we have seen at different point in time. So I would say in terms of data segmentation, we have still not reached to the level where US or other European countries are there.
Okay.
Because they have been using such data points for last 30-40 years. In India, I think it has started in as earliest as like 2013 onwards. The compulsion of submitting data to all bureau has started.
Okay.
So they are evolving. Now the scoring mechanism which they are using is much better compared to what it was 10 years back when we started LenDenClub. But I would say it will still take at least another 10 years time period to see this kind of good pattern, and then possibly we'll be able to classify customer across these segments like subprime or prime.
Household debt is now at about 17.4% of the nominal GDP, and loans as well are showing a rising NPA. So, what do you think this means for the financial stability of the country? And do you think we are now overexposed to risky lending practices?
I have a little different view on this. See, more exposure across the loan means you are increasing consumption in the economy. If that is done in a right way, I think it will be helpful. If we compare ourselves with any other developed economy, including US, Europe, or now with China, China's household debt will be somewhere around 45%. US has around 60%, and few of the European country has as high as like 70-75%. But does that mean those countries are very risky? Not actually. So again, this is one of the myth which we discuss on social media, and a lot of people missell it. It has to be in a right metrics. So for example, if we look at 1 year over year data, it has been increased by around 3%, 14 to 17%, right? In this phase of India's growth journey, we will see a steep rise, and it will continue rising somewhere around 35-40% by the time we reach 2035. And then probably that growth will stabilize or will be little less steeper. But to say that we are getting into risky segments, absolutely not. In certain pockets, in last 1 year time period, the regulator has highlighted certain discrepancies, and they were little conscious as well, that do not take such kind of exposure, stop such kind of borrowing practices, do not charge customer higher. But I think those are cautious measures which are anyways required, and it has nothing, no links with the increase in the overall household debt in the country.
The fact that we've seen the P2P lending market grow, which is something that you as well alluded to, do you think that this democratization of credit is somewhere coming at the cost of higher default risk? I know it's something that we spoke of, but is that a concern?
Again, at times, yes, and majority of the times, no. If we look at situation like COVID and all, because these borrowers will have a stress for some time, you will see little bit rise in the NPA numbers. As I previously also mentioned that our NPA numbers went up to like 5.91% in a peak COVID period, which was end of 2020. But again, it came down and stabilized somewhere around 3%. So that has no direct connection. So majority of the time you will see the performance of retail borrowers very much aligned with the economical performance of the borrowers. So even if you look at the bank data or big NBFC like Bajaj Finserv and all, you will see various company, various segment has a default rate up to 5%. So if these default rates are sub 5%, I think those are well managed. And across P2P platform also, we have seen the data has been somewhere within this range only.
Okay. Any warning signs that investors or policymakers maybe should watch out for? I know you said we are not comparable to what happened with the subprime crisis in the US, but of a potential loan bubble happening, what would be the potential signs to watch out for?
So I think you overnight see the demand of a particular kind of loans. So for example, a couple of years back, RBI saw a signal that suddenly people have started using PPI instrument as a card kind of product. So I think during that particular year, in a one calendar year, India saw an origination of roughly 25-30,000 crore kind of loan through PPI instrument. So that gave a signal to the regulator, and they came up with the revised regulation around how PPI instrument can be used. It cannot be utilized to give loans, right? So you always see sudden spike in the adoption of that particular kind of loan. Okay. So and I think we submit all our data on a quarterly basis, and there is a very close discussion happens with the big players and the regulator on a very frequently basis, at least couple of times a year. So they are always mindful about what is growing, what is not growing and all. And if you are following digital lending world, in last 3-4 years, there are around 2-3 products which are completely stopped. So one was the PPI instrument being used to disburse loan, and similarly there are a couple of other assets which were being originated in 2021, but today nobody talks about it, nobody gives that kind of loan because there were certain regulatory concerns. So they analyze the trend and accordingly guide all the market players.
A lot of the time, lenders assume that they have to rely on the credit worthiness of the borrower through these platforms. So, how do you assess the credit risk via platforms?
So see, we have been originating this type of loans for last 10 years. We have a lot of customer data points. Each and every customer is being assessed on at least 800 to 1000 different data points, including their financials, their behavioral pattern, what kind of consumption they do, and what not. We also have a lot of cohort related pattern, that in what kind of area people behave in such a way, based on their income, based on their other demographic information, what way they behave. Probably you and I may have a same age group. We may have same income group, but because there is a difference in the gender, we may have a different behavioral pattern in terms of repayment of the loan. So everything matters while we assess the borrower, and basis on that we come up with the score to this borrower, and which is compulsory for us to display to each and every lender while they are making the decision of giving loan to that particular borrower. Apart from that, at a borrower level, lender can see around 70 to 80 different data points which we publish on the platform. And if you lend to, let's say, 100 borrowers, data of all these loans are available at your disposal. Whenever you open your app or web account, you can look at all these borrowers as many times as possible. Also, their repayment data, as and when whatever amount they repay, that comes directly into your bank account. You can reconcile those numbers and you can produce those reports in your account itself. So I would say the way you see the transparency in the exchanges, even if you, let's say, buy a stock worth of 25 paisa, you will have that transaction entry in your bank account, cash flow coming into your account or going out of it. The same way it is maintained on P2P platform.
So
And
there's
that is
complete transparency and accuracy
absolutely
of the data.
in our system. The data is maintained up to 8 decimals. So let's say if we have to give you 1 rupee, it is maintained at 1.00000000 paisa, because sometimes the borrower pays back 10 rupees and that has to go to, let's say, 27 lenders. It has to be divided in that way.
Wow, that's very interesting.
In last 1 month, December 2024, my system processed 23 crore transactions between lenders and borrowers. You give me name of the companies or the systems available in India which can process such kind of huge data points. And these are each transaction between one lender and one borrower. So that is a kind of capabilities which we have created, and hence lenders are relying on those data. And when they see such kind of data points coming out of the platform or their account, they start believing, yes, it is something very transparent.
What will also be interesting to understand the tax implications. What are they?
So at this moment, all this money is coming back from the borrowers. They are mainly individual or small businesses, and none of the income is more than 50,000 rupees. So they do not deduct any TDS at their source or at the source level. They pay the whole interest amount back to you as a lender, and as a lender you have to produce that as an income in your return and pay the income tax.
So assume on your platform, you've got 50 crore lenders coming in. The borrowers aren't going to be that much. So what is it that as a platform that you are doing to ensure the borrower selection criteria?
I would wish this situation comes every day. So in such a situation, we have witnessed in past as well, specifically during the COVID period, because we made our criteria of borrower selection little bit more tighter, because we never knew what is going to happen 3 months down the line, 6 months down the line. So those money will remain idle. At that point in time, there was no regulation like T+1, we have to give back money to the source account. Now there is a regulation. So let's say if lender brings money, if we do not have borrower, we cannot compromise or change our policy. Second, from the regulator side also, one regulation asks us to change policy only after the approval of board. So we cannot take such hasty decision that, okay, today money is availability is more, you change the criteria of borrower selection. It is not possible at all.
Yes.
If any platform is doing business with right governance mechanism, the board cannot approve any such policy within few hours, right? So it practically cannot happen. And second, such instances keep coming and going out, but that doesn't change the course of business which we do. So we are happy to let go back that money to lender's bank account.
Okay.
And we as a company always believe that it is good to say no, then say sorry. So it's good that money is going back to their bank accounts rather than that get deployed into compromised borrowers and they don't earn any return out of it.
Bhavin, it's really been interesting to understand this world of P2P lending. Thank you so much for that. I think there have been a lot of key takeaways. The fact that the P2P disbursement market is valued at about 30 to 35,000 crores as of last year. The regulatory framework is fairly supportive over here. It is like an exchange of loans, a smaller ticket size. There are risks involved, but of course, like every other asset class, do not put all your eggs in one basket. It is important to understand this as a product and do your due diligence. Curious to know, what do you make of P2P lending as an investment instrument or asset class? Do mention in the comments section below. Don't forget to hit the subscribe button. We'll catch you on the next episode. Thanks so much for watching.